Hi friends, welcome back to Finvest Talks. Today we are going to discuss fifth stock out of 6 stocks in independent series. Let's begin. So today we will cover a small cap stock which have good potential to give a multi-bagger. So today about that company we will discuss the company overview, the financials of the company, how technically the company is sound, what are the good levels to buy, whether the company is currently at a buy, hold or sell, and also we will see the levels to watch, to enter or to exit. Let's begin. So as a disclaimer, the stock discussed here in this video are not a buy recommendation and it is only for study purpose. So please discuss with your financial advisor before investing. So in large cap we discussed about Reliance Industries and ICICI Bank. On mid cap we talked about the IT giant, that is Tata Elxsi, as well as Polycab. Today we will see one more stock from small cap. The stock is Devyani International Limited. So Devyani International Limited is holding good brands like KFC, Pizza Hut, Costa Coffee, etc. Devyani International Limited is holding good franchises such as KFC, Pizza Hut, Costa Coffee, Vango, Food Street, etc. So Devyani International Limited is largest franchisee of Yum brands and operates the highest outlets of KFC, Pizza Hut, Costa Coffee in India, and the company is the largest operators of quick service restaurant chain in India. It operates 655 stores across 155 cities in India as on March 31st, 2021. In current year, it added several new stores across the cities in India. Now let's see the revenue mix of the company. The company is holding 100% of its revenue from foods and beverage segment. If you see the location-wise breakup, from India it is generating 90% of the overall revenue, whereas 9.1% is generating from outside India. If you see location-wise breakup of revenue, Bangalore is holding the maximum of revenue, that is around 24.6%. Then comes Delhi, Kolkata, Gurgaon, Hyderabad, Noida, Lucknow and Mumbai. So the core business, the core brand business is holding 84% of the revenue, whereas international business accounts for 10.2% and others contribute 5.8%. If you see the QSR growth across the years, the growth of KFC is around 63.6%, whereas Pizza Hut grown by 31.5%. The sales growth of Costa Coffee is around 206%, which is very high. As on Jan 2022, the company has added 391 KFC stores. Now let's see overall snapshot of Devyani. Devyani is currently trading in the price range of 200 rupees. It is holding a market cap of 23,655 crores. Currently, the stock is trading at a PE of 90.6, which is well below the industry standard. The industry standard is around 125. Currently, the company is holding a book value of 5.7 rupees. It is not started paying dividend. The ROC of the company is 16%, whereas ROE is 42.8%, which is very good. The face value of company is 1 rupee and debt to equity is slightly high. So this is one of the area of concern of Devyani. So it is good to have debt to equity below 0.5. In cash flow, we will see whether company is trying to reduce the debt or not. The company is having no pledged shares and the PEG ratio is 3.23, which is on the higher side. If you see the sales growth is around 74.6%, whereas profit growth is in the terms of 1000%. So it means the company has recently shown good growth in last 1 year. The ROC of the company for last 3 years around 11.2%, which is pretty okay. If you see the average sales growth over last 3 years, it is around 16.7%, whereas profit variation is around 57%, which is very good. The company has generated free cash flow of around 158 crores, whereas the net cash flow is around 17.5 crores. If you see the shareholding pattern, promoters is holding around 62.8%, whereas FII is holding around 6.9% and insurance company along with mutual fund holds 5%. 24% of the shares is held by retail investors. Now let's see the profit and loss statement of Devyani. Devyani has generated a sales of around 1000 crores in 2016, whereas currently it is having a sales of around 2000 crores. So that means over the past 6 years, it has doubled its sales. It is pretty okay. In terms of operating profit, the company has turned from operating loss to operating profit. Now currently, the company is having an operating profit of around 580 crores in last 12 months. If you see last year, the company has generated overall operating profit of 476 crores, which is very good. So there is a significant growth in operating profit across the years, and the growth is also very good. In terms of operating margin, the company started with a single digit operating margin. From there, it started growing its operating margin. Currently, it is holding an operating margin of around 24%, which is very good. If you see the net profit, it started from a net loss making company to profitable company recent years. So it has generated 155 crores in last 1 year, and the last 12 months it has generated an overall profit of around 263 crores, which is very good. Let's see the cash flow statement of Devyani. So when we talk about cash flow statement, there are three important terms. One is cash from operating activity, cash from investing activity, and cash from financing activity. So first one is cash from operating activity. The company has generated an overall profit of 69 crores from its operation in the year 2017. From there, the company grew to 445 crores in 2022, which is a significant growth across the years. Investing activity, company has purchased assets worth rupees 306 crores, which is very good. So company is adding more assets which can generate more cash flow in the coming years. In financing activity, it is showing negative 50As, which is very good, which shows the company's interest to pay borrowings. So if you see repayments of borrowings, it is shown 395 crores. So this shows company's interest in repaying the loans. So even though the company is having a debt to equity ratio of around 1.8, it is showing good interest in repaying the loans, which is a good sign. So one can take a calculated risk on this company, seeing the future prospects of growth. And company is also keen in repaying its borrowings, which we can see from this line item. So across the years, company is paying significant amount on its borrowings. So in last 1 year, borrowing is also reduced and repayment of borrowing increased. That is a good sign. Now let's see some of the important ratio of Devyani. If you see ROCE started growing from single digit to double digit. Now it is holding a ROCE of around 16%, which is very good. If you see return over last 1 year, it has generated a return of around 64%, which is very good. In terms of daily chart, the company is still holding above 20-day moving average. Here in this chart, we plotted various moving average, like exponential moving average, starting from 9-day moving average to 200-day moving average. The pink line shows 9-day moving average. The next line, green line, that shows 20-day moving average. The blue line shows 50-day moving average. The yellow one shows 100-day moving average. And the orange one shows 200-day moving average. The company is currently trading above all the moving average, which is a good sign, showing good upward momentum. If you see RSI is trading near to 60 range. It is about to cross the 60. Once it start crossing 60, then the price will start moving up significantly. So one can safely bet this company at current levels for a good upside. You can safely start accumulating this company above the 20-day moving average, that is around 185. You see on weekly chart, it is trading above 9-week moving average, and the RSI is also showing above 60, which shows good upward momentum. As an overall conclusion, company is showing strong operational performance and efficient capital allocation with reduction in store size for core brands such as KFC, Pizza Hut and all, which will help the company to generate strong cash flow in the upcoming years. So it is one of the strongest small cap bet for next 3 years. So in our next video, we can see one more small cap stock which is high potential to give good upside return over the years. Can you guess the stock? It is one of the proxy to mutual fund industry.
Please do like if you like the video, and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday basics to make your stock market journey easy. Thanks for watching and have a good day.